The people who succeed are irrationally passionate about something. Naval Ravikant. And Naval hits the nail on the head. You've got to be excited. You've got to be enthused about the markets, about trading, about investing. We want you to start off practice trading with us, learning how to read these stock charts. Think about the knowledge that you will have, the skill set you'll have once you master this, to be able to sit down, read a chart, follow a trend. The world's your oyster. It's just amazing. That's why it excites me every single day. I come to you day after day after day, and you wonder, how am I so enthusiastic and so excited all the time? Because I dearly love this. This is not a numbers game. I'm not an engineer. I'm not just going through the motions. And not that engineers can't enjoy things too, but I'm saying I look at it passionately, not as simply a numbers game. I enjoy this. I enjoy the challenge. I enjoy how it's always keeping you on your toes and you're always learning. It keeps you alive. So I want you to have that kind of passion. And if you don't, you're probably just not going to be very good at this. It's just not going to be your cup of tea. Go invest in real estate. Learn other things. But again, 10 to 15 minutes a day, that's all we ask. Practice trade to show yourself approved. What do we see going on? Nice things in the stock market up. We see bonds are flat. Gold is up a little bit. Let's jump first as we always do. Oh, I do want to tell you, I am so sorry. Options trading number 2 and 3 were somehow marked private. I fixed that. I'm going to introduce options 2 again today. And you'll see a link at the end of it to options 3. I've already set that up for you so you can get both of them now. But I apologize if you already watched 2 at some point and want to get to 3. Just go to the end. You'll see the link there for it. But again, thank you so much for those of you who reached out to me and said, hey, we can't access this and we really, really want to. We want to get your options training. It's absolutely free. You can get it. You have to be a subscriber. chartingwealth.com for free. Go there, sign up for our daily market review. I will be traveling tomorrow. Have a flight leaving at 4 in the afternoon heading out west. I should stop for a layover. I will try my best to do the weekly comprehensive review and forecast in the airport, get it uploaded for you. If not, it'll be sometime Saturday, but I'm going to try to keep that from happening. Thank you so much for all of you who purchased the books. If you do want Charting Your Way to Wealth for Christmas, please order it tonight. That is Thursday night. I will do my best to get it in the mail to you, maybe early in the morning if you order it. I'll try my best to get it out to you before I go. That will be on my punch list. So again, Charting Your Way to Wealth, it's our book that explains what we do. You'll see a link in the show notes to purchase it. And of course, you want to do something nice for us for Christmas, become a Patreon supporter. All sorts of great things there. Our once a month weekly, or once a month question and answer session. And we love to take your questions and do some more intense training with our Patreon members, plus the short chart training, long chart training, Bitcoin training, all the special trainings we put out early on for you guys. Now, let's jump into these charts. What do we see? Well, we look at the S&P and we have a nice big green up candle going higher. Price percent oscillator going up at a higher angle this week than last week. And look at that derivative oscillator. It's gaining some momentum. That's quite nice. We go from the weekly to the 2-day. Remember our 2-day crossover and jumping in point on Friday, somewhere around the 316 mark. How high have we gone? 320.98, almost $321, 2 cents away. That's some pretty nice upticks over the course of just 4 days. Quite beautiful, is it not, friends? I love seeing that. We see that we reached a higher high. Candles bigger, as is the wick. Price percent oscillator heading up. The derivative oscillator is now green. We finished drawing that Wednesday, Thursday candle. Prices well above the weekly. And, you know, we can go ahead and redraw a 2-day trend line. That is easy enough to do. We just go to trend. We just pop it in here. This is what's so brilliant about freestockcharts.com and the paid version TC2000. We have 3 candles connected. It is that easy to do. It is the best online charting platform there is in my book. And we have a $25 discount. Follow the link in the show notes. Let's go to the 4-hour chart. Now remember, it had just been sliding sideways, but popped up in the morning. Further up in the afternoon, do see the down movement on that green candle. So it's more like a spinning top. There's some indecision in there. We can see that reflected a little bit in the price percent oscillator, not heading up as much as you would have thought it would have done. Derivative oscillator also continuing to lose momentum. Nice to see, though, the S&P up, doing well for us. The beauty of that weekend effect or however you want to term it, weekend effect, Monday effect. But when you have a 2-day recross, which is what we had, that is where the 2-day chart moves back in the direction of the already existing weekly trend. We call that a recross. And when you couple that with the weekend effect, because that took place on Friday, it is quite beautiful. Now, again, it was not super clear on Friday. What made it easier was the fact we had that weekend effect working for us. We're going to go to the Qs now, and we see that the Qs continuing to build a strong big up candle this week so far. One more day. Price percent oscillators gaining a little momentum. Price percent oscillators heading up. Derivative oscillator looks like it's maybe a little more than flat. Look like it might be gaining just a little bit of energy there. Go to the 2-day chart. Now remember, we had that 2-day crossover at the end of the day on Tuesday. We talked about that somewhere around the 209 mark. Again, caveat is these are Heikin Ashi candlesticks. They're not your typical, so it's not, particularly when you're using a bigger chart, not necessarily as accurate as it should be, but somewhere around the 209 mark, hitting a high somewhere around the almost 211 mark in 2 days. Not bad. Price percent oscillator gaining momentum, going up. Derivative oscillator gaining momentum. I always seem to have trouble with those two, mixing them up. I apologize. What do we see on the 4-hour chart? It's heading up. Price percent oscillator is up in the morning. Further up in the afternoon, beautiful. Derivative oscillator still losing momentum. So again, keep all those things in mind, all the charts, all the time. We leave stocks to go to bonds, which are flat for the day, down for the week. Nice down candle. Solid red with a wick on the bottom, plumbing to lower lows in the body and the wick itself. Price percent oscillator ticking over further down. Derivative oscillator still losing downward momentum. Go to the 2-day chart. Check out that latest 2-day candle. Lower lows since things rotated over. Well, since we started seeing red candles forming. We had that crossover. We talked about that on Tuesday. Quite nice. Somewhere around the 138 mark. How low did we go? All the way down to 135.76. So that's quite nice. Again, just flat for the day. Price percent oscillator heading down. Derivative oscillator gaining downward momentum. Go to that 4-hour chart. And again, down in the morning, and that's where we went flat, was in the afternoon. So again, keep your eye on the 4-hour chart, but pay much more attention to the 2-day and the weekly. The bigger the chart, the bigger the energy. Think about it that way. All things being equal, the market tends to move in the direction of the largest chart. Going to go lastly to gold. What's gold doing? Well, we can see that this week is not reaching a higher high as far as the wick on top. Bigger body, but not a higher high. Price percent oscillator still barely heading down. Derivative oscillator losing downward momentum since it bottomed back on the week ending Friday the 29th of November. Go from that weekly to the 2-day chart. And of course, we had that 2-day crossover all the way back on the 5th. And we saw things plumb down on the 9th, that 2-day candle. But since then, been moving up on the 2-day chart. The latest candle body barely above the prior one, but, well, and even when we look, we still haven't reached a higher high than we did back on the 2-day candle ending the 13th of December. It is a green up candle, but again, not super strong. Price percent oscillators going up, that's good. Derivative oscillator continuing to gain upward momentum. Prices above the 2-day. So again, 2-day still in a confirmed up move. Weekly's in a confirmed down move. When we have that schizophrenia, the intermediate chart going against the weekly chart, we don't have a trade. So we are either waiting for a recross going down on the 2-day or for there be enough momentum on the 2-day to drag the weekly up in its direction. Now we go from the 2-day to the 4-hour. We can see that 4-hour chart up in the morning, further up in the afternoon. We'll just continue to watch, see how gold finally shakes out. Folks, that's where we are as we end the day on Thursday, go into the last trading day of the week, and then what do? We go into the Christmas season. Going to have a short day, it looks like, on Christmas Eve. Of course, markets will be closed on Christmas. There will be trading on Thursday and Friday of next week, but again, things are probably going to be, unless madness occurs, it's just not going to probably be a lot of volume, a lot going on. But we're going to pay attention. We're going to keep you posted. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters. Merry Christmas. Happy Hanukkah. Happy holidays. And I don't know what the greeting is for Festivus, but regardless, God bless you guys. Take care. All the best.